Hello, traders. My name is Anna, and I'm head coach at Leveraged. And today, with me, I have Devet joining me for this live trading room where we're going to talk about charts, about anything topic related to the trading. So, thank you so much for joining. Hello,
Awesome.
Devet. Tell us
Hi,
how
Anna.
you are. How you doing?
Good, all good. It's
Okay.
the middle of the week. So in South Africa, we have this, they call it Little Saturday. So usually on a Wednesday, everyone
Yeah.
would want to celebrate, have like a small Saturday. So usually Wednesday evenings is like for barbecue or having a braai, as we would call it. But the weather does not seem to fit that description. So we're cold but
Yeah.
yeah, enjoying the week so far. How are you doing?
Enjoying the cold so far sounds great. I'm doing, I'm doing good. The weather is picking up in Latvia. Everyone is laughing that this, finally, the summer has started. So it's like middle of the June, but no, July, not the June, July, and we're like, yeah, the summer has started. So it feels like it's been such a long spring, so.
Yes.
Yeah, so finally now we can see that there is actually some summer action going on, which is good to see, to be honest,
Oh,
because
that's
once the
lovely.
sunshine is out, everything is better. But yeah, and also speaking about the trading, like it's been going really good. I had really hard and challenging start of the year, but
Mm,
now as the sun is coming out, it looks like my equity curve is reaching towards
improving
the sun. Yeah.
sun. I remember you
So that
said if the sun's out, your profits are out. If the sun's down,
exactly,
profits are down.
exactly. So that sunshine better stays, or the easy fix, as my husband laughs, is we just need to move to Bali because
Then there's always sun. Yes.
yeah, exactly, because the sun is always there. So that means it's always going to be profits. But no,
Nice warm weather.
so today, like the plan is, I'm going to update you guys on my AI analysis account that I started end of June. So it's been about a little bit more than 2 weeks of trading it, and I'm going to give you an update on that. Then me and Devet will walk through the charts to see what's going on, because yesterday there
Mm,
was some significant moves happening, which is great to see that the market is moving. So yeah, we'll decide how we're going to do it and what we're going to in order. But first, I think we're going to start with AI analysis, Devet, if that's
great.
okay.
Yes, 100%.
Okay.
Excited to see it.
Okay, so this is here. You can see my CTrader account. This is the account that I have been using for AI analysis, and currently you can see that there's 9,000 up. If you can see, if you squint your eyes, okay, you probably will be able to see it. So
It's
it's
quite small, yeah.
9,000 in the profit, which is good to hear that I'm in the profit. But like there will be traders who'll be like, oh, it's only 1%, it's not even one. Da, 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 da. It's okay, guys. Don't moan. I used very low risk. Okay. And another thing is, I was not all the time looking for setups like, a hunter hunting for its, I don't know,
Pray.
deer or
Pray.
something. Yeah, prey. Exactly. So I was just taking these setups when I had time to look at it. So if I would trade, as do my analysis on my EU and GU pairs, then I would look also on the AI analysis tool. What is it saying
Mm,
me to do? So, and currently I am in this trade. There was analysis on the NAS 100. And if you know me, then you should know I don't trade NAS 100. Like I only trade the pairs, GU and
yes.
EU. And so this is like all very much new to me. And but I just also want to say that, wherever I take a trade, it's not just simply because AI analysis says to do. Like I
Mm,
actually try and see if there's any like support areas, resistance areas, something that's actually making sense, to get into that trade, because definitely I don't want to get in the trades that I don't have any analysis on, simply just because the AI analysis says me to do something. So this trade in here, this is a support right here, and I saw that it was basically telling me that it's going to be broken, right? And I was like, well, okay, it feels about right. This could be broken. And also another thing that I do notice, if you do patterns, right? So in here you can see head, no, the shoulder, a head, and another shoulder. And normally for this kind of pattern in the market, what it means, the price will most likely move all this length to the downside. And then when I look left for like, more support areas, that's support in here. And that's why I put my target also in there. So now I just need to let the trade breathe. Obviously, it was great to see how it pushed down into profit. And I mean, let me see how much of the profit it was. Let me see. That was like two. That was one. No, 2.5. 2,500. That would have been a good profit. But I think as a traders, we also need to trust your analysis and just let the trade. And this is where sometimes people, like traders, right, they get a lot of let's say emotions coming in, and then they are like, oh, I want to cut my trade early, and they just take the profit. And you know what, you probably would feel worse if you would see that the price is now, by the end of the day, it's going to reach this profit target, right? And you only closed as soon as the price went in the profit. So it's like, you will feel emotion regardless what you do. It's just the control that we need to have, that control in that moment, what's happening. And you know what, for me, I have put 2,500, just a little bit more in here, 2,600, which is 0.25% of the account. And I'm very, very comfortable taking that risk because I know myself, and I know that, this risk that I'm risking with, I'm very comfortable with that. And most importantly, I accept the loss. So even if it does hit the stop loss, so what? We move forward. And I think this is the place where traders struggle the most. And I've definitely been there. I don't know, David, how about you? But I think for me, when I accept the loss, it's so much easier to move forward and to see, and not to get the reaction on your emotions if something doesn't happen, to your plan. But I feel like it's definitely easier for me to control if I straight away, if I choose the risk that's good for my risk appetite, let's say, and 0.25%, it's great because my daily drawdown here is 3%. I mean, how many trades I need to make? 15 trades to hit, and all of them 15 needs to be just to, like, it's almost, I want to say, I don't know if you can agree or not, but I want to say it's when you risk 0.25%, it's almost impossible to hit the daily drawdown.
Yes, if you stick to that risk.
Exactly. Or obviously it is possible to go through that many losses in a row. I've been there. I've done it. My worst losing streak. And I'm not saying all of them losses were straight away, but like there were break evens, a little wins, but it was 27. But obviously then that was signaling to myself that something is wrong with your edge, Anna. Something is not aligning, and you actually need to go and do the work, and you need to figure out what's going on, right? So it can happen, but then you just need to figure out what on earth is going on with your strategy. But technically, when we speak it like this, 0.25%, you should not be able to hit the daily drawdown. You just, it's impossible. Really, it's impossible. And also for you to have 15 setups, if your data says that maybe you're only taking 5, setups a day, again, you probably need to make some, mistakes if something, like that happens.
Yes.
But yeah, 0.25, it's a good risk. Also, let's talk about the other side quickly. Let me explain. If you risk less, what happens? You will win less. It's just logical, right?
It will take longer probably as well.
Exactly.
In terms of passing.
Yes. But now, do I want to go on that thrill and like get the accounts passed much quicker? Possibility of lose more or even breach account? Or do I want to take the safe approach? And the thing is, I think both are fine. It just really depends on the traders, how well you can control your emotions to go aggressive or to go slowly. And I think there's nothing wrong for those who choose to go more aggressive. I have done both. Like I have done both when I went bigger risk on my prop accounts, So I think it's absolutely fine. But one thing is clear, that if you do choose to do smaller risk, so risk 0.5% or 0.25% or even 0.10%, whatever it is that risk you choose, you already need to accept, as soon as you place a trade with a smaller risk, you just need to accept the loss, but also you need to accept that the winners, they will be smaller, and it's
Yes.
gonna take longer. So it's just it's up to you. David, I'm curious, what kind of approach do you normally use? Are you going a little bit more aggressive, or you're, where about is your risk for the
It
setups?
it changes. Actually, on that note, I spoke to a friend in this week yesterday that said he bought accounts and they were on. I think it was futures, so they would had the special that was very cheap. Futures has these discount prices, and then he bought an account, went full margin on it, failed the first one, bought another one, went full margin on it, failed it, passed it, and then got funded. And I've heard of a lot of people going that route, where especially if it's really cheap accounts, they buy a lot of them and just try to pass them, just to just pass it, and then once they're funded, then they apply the proper trading, risk less, and keep the account and get to a payout. So that's the one way. And the other way, as you mentioned, is the slower approach, where you, in the challenge phases, trade it as you would fund it.
Yes.
So that's the other approach, and I think both have merit, and both can work, and I've tried both as well. So currently, I think it's more of a slower approach, risking less. And on that, I wanted to ask you as well, on this account, would you ever risk now more once you have a buffer? Would you stay this risk 0.25% until you've passed it, or would you eventually increase the risk?
Okay,
because that's what I was been thinking. That's how I usually do it. I would have a lower risk, increase the account, and then add to it. Because obviously, if you're thinking of it, you ideally don't want to spend 6 months on a evaluation. You want to make money on the account, right? That's the goal, is to make money. So I think you need to be tactical on how you approach it, how you increase your risk. So what's your thoughts?
Okay, really good, valid question. I have talked with the traders when it comes to how we should approach this, building the cushion and all that. I'll give you the answer as a data-driven trader. So this AI analysis, I've been only trading for less than 3 weeks. So I don't have a lot of data on it. And why I chose the lower risk is simply because I didn't know how much of the losses I'm going to go in a row. Like I didn't know any data on this. Like for my strategy, for example, my intraday, I know now my losses have gone to, like when it comes to actual stop losses, I can go even 8 losses in a row. Used to be 4, and now it has doubled. So therefore I can decide, seeing from my data, I actually need to lower the risk. Like with this approach with AI analysis, I have never traded it before. So therefore I needed to figure out what would be the safest risk, because I didn't know, what if I go like 10 losses in a row? I can't risk 1%. I don't want to risk also 0.5%, because, then I'm going to be in a drawdown, and I don't want that. So it's like, for me as a data-driven trader, I was like, I need to choose the safest option possible, because I have no data on this. I don't know what is my losing streak, what is my winning streak. I don't know how many setups a day I take. I mean, you know what I mean? There was no data. So that's why I chose this 0.25%. Now, good thing, I think, where to start to think, what is it I can do with the risk? How should I approach? I simply look at your, history. So you can see now here that 3 in a row is my biggest losses, 3 in a row, which is, if I risk 0.5%, I'll be down 1.5%, which is, to be fair, quite a lot, because for this account, I mean, my drawdown is 3% and 6% overall. So to be fair, for this account, and also meaning that these accounts are bigger, especially if you go for a 1 million account, I will take 6 months if I have to pass. But then I know my end goal, like the goal is so rewarding. I will get to trade with 1 million, right? So that's why also, another thing you can look, we talk to traders. For example, I say, what is your comfortable number? And obviously that number needs to be, you need to make sure that number comes from your drawdowns, right? Obviously it's different when you trade personal account, but when you trade with leveraged, for example, senior account, you have 5% daily drawdown and 10% overall. So what you feel also comfortable, obviously data first, but then what are you comfortable with? I have had different, let's say there was a trader just last week. We talked about an amazing trader. The data, everything is there, really, really good performance. And yet, traders struggling with that mental pressure when it comes to seeing the bigger numbers. And therefore, their risk is really, really small. If they would even have the risk, right, they would have already passed the phase one. And currently,
Wow.
they are, I'm not saying they're stuck because like I said, the strategy is great. The data is really, really, really good, but they are stuck mentally because I can't force myself to put the bigger risk on. I just can't. And I'm like, well, we need to work through it. Let's try and increase that risk just bit by bit. So it's like we have so many, people and so many have different approaches when it comes to risk and the way how they calculate, the risk. Is it from the drawdown? Is it from overall balance? It's, for me, I'll tell you this now, since being a head coach here at Leveraged, I feel like now I understand traders more because I have had so many one-on-one conversations with traders that now I can actually, like, I'm building my experience now just by talking to traders,
Yes.
which is obviously great. But for me, the first default goes, look at your data when it comes to deciding on the risk. And after you see your data, then you need to connect those two things. And you need
They
to
need
make
to
sure
work together.
exactly. And mentally you can do it because I think, for example, David, I don't know, let's say you have a great strategy, right? And and it works really well, but then there's a mental block where you cannot afford yourself to put that bigger risk on, right? So it's just, you need to work through the steps. You need to slowly increase it. You don't need to, I said this is like a stairs, right? You don't need to skip the steps. You just slowly, go from one step to another. But I think it's just it's what you said, they work together, the data and the motions, everything works together. And as traders, we just need to make sure that everything is so aligned that you don't feel overconfident. The worst thing though, what can happen, I'll tell you this, and I've had these conversations, trader comes in and help me to be profitable, they show me their results, and it's losses after losses, and I'm like, why is it? I don't know. And I'm like, what do you don't know? Like, how do you don't know it? Like, you don't have the data, you don't have the plan. And yet those traders will be comfortable throwing 1%, 2%. So it's like, it's really, like I say, it's really, really interesting to connect with the traders and see how they are thinking and then helping them. So some needs to be pushed, some needs to be like, hey, go
Restrained.
Yes, restrained. And let me tell you this, I have been in trouble. Traders don't like to be restrained. And when I try and help them, someone will go and like, Anna, why do you tell me this? And they can get quite upset with me, but my intentions are always good. I want to help the traders and I want to give them the best. And to be fair, I wish when I started my journey, especially with prop firms, I wish there was a coach who would say, Anna, you need to lower your risk because your data is ridiculous. So, but yeah, it's just, we can, this is the topic you can speak and speak because there's so many options you
There's
can
so much
talk
to say about it. Yes.
Exactly. And it's like you just won't shut up, I need to say. But anyhow, we have a question here from Daniel, and he's saying, do you limit yourself to how many trades you have opened at once? Oh, David, maybe you want to answer this for your strategy. Do you limit yourself?
I think I do limit myself. I prefer not having more than 2 trades open. I've had 3 trades open at a time, and usually it doesn't end well. So I think the best for me usually is just having 1 trade open.
Yeah.
And because often I can get stuck with accidentally having trades open that's negatively correlated, and I'm selling both, but one is going to go up and one is going to go down.
Yeah.
I've had that mistake, so it's better to just focus on one pair. What I've been realizing this year is I've been looking at too many pairs and then seeing different setups and then wondering, okay, but I'm seeing something here in 3 or 4 different places, and I'm wondering, then I either end up taking all of them with less risk, but then it's just too much to manage and keep your eyes on everything.
Mhm.
So for that is then it's better to just reduce the pairs that I look at, and then it's only ever possible to see maybe 1 or 2 setups
Yeah.
happening at the same time, which makes it then easier to decide on what to take, what to trade.
Mhm.
But I think the sweet spot is only having one position open or one trade open. It can obviously be split into multiple positions on that one trade, depending on how you enter and how you manage the
Mhm.
trades.
Mhm.
But so like 1 or 2, 1 is the sweet spot, 2 is a bit aggressive, 3 is, well, you need to watch yourself now.
Yeah. And that's your personal, right? So that's from your personal strategy. So if you guys are listening to this and you're someone who is like a scalper and has normally like 10 setups open, so don't listen to the vet because he's speaking from his personal experience, right?
Yes, yes.
Because there's like many things, like just so personal. The same thing, I'll tell you this, I trade 2 pairs, and to be fair, I don't mind if I have like 2 or 3 positions open because I'm so confident in my data, that I'm okay with 3 positions. But the thing is, very rarely I will have 3 positions open because normally, I can have I mean, normally just 2 trades really, because I take a setup because I'm an intraday trader, and sometimes I let my intraday trades run to the longer if it's taken from like a sweet spot of daily or for weekly resistance, like really, really key level there. But honestly, other than that, like it's just 2 trades. Very rarely I will have 3 because maybe I'm holding like a swing setup on EU, and then intraday shows up on EU again and also on GU. And then, I'm having like 3 trades. But honestly, more or less, it's just 2 setups. So I think also the approach to be how you can limit yourself is, do you have to limit yourself at all? Because I used to be there where I'm like, I'm just going to take 1 trade a day. All I need is 1 good setup a day. And I would get in trouble because I take the first setup and I'm like, I'm done I'm done trading for the day. I'm not even going to look at other, the things that I'm going to whatever present. And I would get in trouble because that 1 setup a day would not work. If I would have taken all my setups, then looking at the data, I see I'm actually more profitable that way, because maybe that 1 trade a day that I'm taking, maybe that first setup somehow is not the best setup to take. So I need to just take all of
Yes.
them. So again, it's just so personal. It's
I've
really,
had this
really personal.
I've had this discussion with many people, or a lot of times, that 1 setup a day. I've
Mhm.
heard good arguments for 1 setup a day, and I've also heard good arguments for, like you now say,
Yeah.
you take a setup when you see it.
Mhm.
So it's, as you said, I think it's very personal, and what works with your data, because each person's data and how they interpret it is different,
Yeah.
and mental states are different. So yeah, you're right on there. It's very personal.
The only thing is, what I would say is that, whatever you hear someone talking, and that's why I say, don't take all my words for as if like, now I need to do as Anna says. And this is where it can go really wrong, especially when someone newer to trading, they are looking up to influencers, for someone who has been trading for a longer time, and they have their, I mean, I don't know, like the trading celebrities, let's call them, right? And you're like, oh, I wish I could be like this or that or this or that. But the truth is, trading is a personal journey. And there's no traders. I've always enjoyed this saying, where if you give the white blank paper to 2 artists and you put them at the sunset, in front of the sunset, and you say, now paint me the sunset, there's no way they will paint the same painting.
Same
Just
sunset,
no
no.
way. Exactly. Like same sunset, but no way it's going to be exactly the same. It's the same for the traders. You go in the charts, you're like, okay, now do your analysis for me. There's no way you're going to do exactly the same analysis, because you know what it is? Yes, the charts, the technicals are there. And maybe if you trade a certain way and everything, you will see it the same way. But when it comes to executing, no way you're going to have the same emotions. Because me and Devet, we've both been trading for quite a long time now, right? And we've been through a lot of in our journey. And I laugh that there's nothing new under the sun that I haven't done as a trader. I've done it all. And the thing is though, like when it comes to execution, yes, maybe me and Devet, we can come up with like manual rules that we're gonna trade. But when it comes to execution, there's no way that me and Devet will be same on the emotional level, because maybe
Exactly.
he will feel like, this is too much or this is too little risk. Maybe, he will come up with, or he will feel inside of him maybe some kind of FOMO or fear or whatever it is. So it's like, that's what I'm saying. Even if we both look at the same charts, the same as artists look at the same sunset, there's no way they're going to paint the same painting, and there's no way we're going to trade the same way. Although, yes, technically it could be, it is the same, but emotions that we feel, it's very, very, very personal.
Different.
So, but yeah, when it comes to restricting yourself, just make sure that you do it based on your data and then based on your emotions, how you feel about it. Because there will be traders who will say having few setups a day, like 2, and then I shut my charts and then I go is the best decision I have made. There will be traders who will say having 2 setups is what destroyed my good edge, so that's why it is like really, I mean, such a different, and simply because it is personal. If the trading would be that easy and everyone can trade from the one blueprint, it would be great, but it's not the case,
It's not as simple.
It's not as simple, no. And the thing is, also like I enjoy these topics and I enjoy talking about it, because I think in trading, once you like, let's say once you learn how to do the chart analysis, how to enter your trades, once you have the plan, I think that's like a boring part. What really excites me is to see myself as a trader, how I grow. Like, I went through my biggest losing streak. I went through for 6 months being really stuck and, I didn't lose. I was like just a little bit in a profit for the whole year, right? So it's been like 6 months and I'm like stuck. And it's really, really hard. But like through these 6 months, I've learned so much more about myself as a trader, not like as Anna, as person, but like as a trader, more than I have done like in the past, 7 years. So yeah, it's a journey, guys. If you're traders, welcome to the journey, because it is never ending. You will fight with your emotions, you will fight with loads of fears, and in the end of the day, we are emotional beings. And I mean, you can be in the zone, you can meditate, you can do all these things that help you, but you will still feel something. And if someone comes and I'm so in my zone, I don't feel anything when I execute the trade, I'm like, stop lying to me and stop lying to yourself. There is always be emotion. Maybe that emotion is calmness, but I don't know.
If you have a heart that's beating, then you have emotions.
Then you have emotions. Exactly. We are emotional beings. And even, because we can then talk about, the vet, we're talking about everything today now, but this one is really good though. If you are a manual trader, and if you're someone like a discretionary trader who reacts to the price action based on, just like reaction where the price is going, and there's no really like manual rules in place, it's the same thing, right? Because the manual will be like, I don't need to have any emotions. Trading psychology is BS, to put it nicely, okay? And I'm like, well, but as a discretionary trader here, because my zones, the way I see them, that's discretion. That's like that's my edge, and that comes with experience. So it's like I will have emotions, because even sometimes when I see there is a zone and I'm like, is this the right zone? Maybe I should like squeeze it. Maybe I should extend it. Like, there are maybes in my strategy. Definitely, there are many maybes. There are a lot of questions when it comes to also setting these zones. But as a manual trader, they'll be like, I don't need that. I just trade the daily candle. If it's bearish, I'm selling. If it's bullish, I'm buying, for example, right? So this is like simple. But the thing is, again, those emotions kick in not when you do analysis, but when you execute. And you cannot tell me that you are just
when you see the numbers.
You will see the numbers, you will see the price either go in your direction, go against you, and you will start to have these, maybe should I now try and figure out how to add in, how to take partials, how to we are humans, and like I said, we're emotional beings, but to be fair, I haven't talked with anyone who maybe one trader, like, because he's really always about like, there's no trading psychology, it's all rubbish, and all that. So maybe one trader, because the way trader trades is like very, very manual, and it feels like there's no emotion. But still, I mean, hard to believe when you look at these numbers. I'm like, so what? You don't get excited when you hit the take profit? You don't get excited, or how do you feel when the price is going against you? Don't you start to feel like maybe there was something wrong? Maybe you should have looked at something, So it's like it's hard to believe. It's hard to believe. I'm not saying the trader's a liar, but it's really hard to believe. Okay. But okay, for the benefit of that trader, I'm like, okay, yeah, it might
Yes.
be, but for majority of traders,
For the majority of us.
yeah, majority of us for sure. I'm in that majority, guys, because I've been trading for
Most
years,
definitely.
and I still go through lots and lots and lots. But anyhow, so just to quickly wrap up what's going on with my AI analysis account, I will still keep on 0.25% risk, because I think that's, there's not a lot of data. Yes, it does show that 3 is the maximum loss in a row, but I just want to build more data on this, and let's see how it is. Maybe if I need to see, because also currently, actually, I'm trading negative risk reward, because many times trades are negative risk reward, which means, if I risk 2,500, not always I'm getting 2,500 profit, which is actually normally way less, just above 1,000, 1,500. There was these two trades, bigger trades, but as you can see, that's very rarely is happening. So just more data. So I'm going to keep on trading. I'm not taking all analysis, so I'm only taking when I have time. And let me see how many, like, some days I'll take lots of setups because I have a lot of time.
Yes.
Some days there'll be 3, 4, whatever it is. Yeah, but looks like 3, 4, that's like a spot there. 2 as well, 2, 3, 4, something like that, around that. But yeah,
And sometimes those old trades are all together, right? It's placed at the same time, more or less.
yes,
Or you're in at the same time.
it depends really.
Okay.
I would need to see if I can put the. Actually, this is something that I could create the separate video about, just to see, what would be approach in trading AI analysis, because the traders who do use AI analysis, some will be, they trade from that AI analysis and then adding their own zones and adding their own places. And there are traders who are like doing their analysis and then just look, for extra confirmation. So they just need it as an extra confirmation. Yeah. So they're not gonna, because what I'm doing, I'm actually taking their analysis, the AI analysis, as like a main thing, and then I'm adding my own analysis to it.
Your
right?
own spin to it is.
Yeah. But the one thing I will definitely not do is just simply sell and buy whatever the AI analysis says me. Like, I think there's still, that's why in the Discord I always put like the little brain, that the human brain is needed if you want to operate this. Yes, because this is like not to replace you as a trader. This is actually to help you, and that's exactly what Tal said in our Ask Me Anything session. That he said these AI tools are actually to help traders make better decisions in the markets, not to replace traders, but to help them. Right?
Just
So
added bonus.
So I think maybe another 2 weeks of trading this with AI analysis, and then there's going to be enough data to dive into, and then I can speak a little bit more, what would be the next steps when it comes to increasing risk, maybe decreasing risk if the data is terrible. I mean, I need to make a decision maybe to also decrease it, but like currently it looks okay. So we will see how that's going to plan out. But anyhow, David, do you want to maybe share what is on your horizon? What is it that you are looking at?
Yes, I actually took a short on NASDAQ this morning, which was a great trade
so
for me.
NASDAQ is the same as NAS 100, right? So that's what I'm doing. I'm shorting it.
NAS 100, exactly.
I feel so stupid when it comes to it's like terrible. Okay.
So I'm going to remove everything and I'm going to break it down. So I started off on a daily, seeing that the previous day traded above the all-time highs, and then we closed we didn't close bearish. We closed back inside this range. So if you look at this as a range, it closed back inside of it, right? Then on the 4 hour, looking for, so there's that line, looking for fair value gaps. So we see have a fair value gap right there, and the 4-hour traded into it, and we're starting trading lower. This then was my target, that 4-hour swing low. So I found the kind of what you call the context area or a tradable area. So it was between this 4-hour fair value gap and this
Yeah.
4-hour swing low. Then if I jump to the 1 hour, I would see that the 1 hour also traded into a fair value gap, which is an added confirmation. And there is my 4-hour swing low. That was the objective. If I then drop to the 5-minute, my entry was right in this area. So we had this zone, this order block area, and we saw this break towards downside, a break in structure, and then the entry was this, exactly this. It's actually a little bit bigger, 1.7 risk reward. So just using the high time frame, dropping it down from the high time frame, the 4-hour was in a 4-hour fair value gap that we traded into, and then the 1 hour traded into a 1 hour fair value gap, which was also the 4-hour fair value gap, which is added confluence. And then on the lower time frames, the first clear breaking structure that we had was right over here, a pullback and then a continuation. So very, very kind of straightforward and simple. Not simple in the sense that it's a step by step. Not simple as in is easy. Don't want to get that confusing. GU, I had something similar in the works. So I've been looking at this low for quite a few days since we traded into this fair value gap, and we've been trading, reacting off of these fair value gaps, giving a retracement, reacting off of some level, giving a small retracement. But ultimately, this red line, I told a friend last night as well that I had this red line on my chart for quite some time as a potential target for price to trade back into. We can see that every day it was just bearish, bearish, bearish days. And up until yesterday's close, we didn't create, well, there was a bearish fair value gap as well, but we really closed strongly bearish. So my whole idea or thesis is that the price will first run to this low before we see maybe a pullback to these fair value gaps that we have on the left, this one, and then this one as well. So kind of having a bearish bias. If we then look at 4-hour as well, we have this, what you call it, kind of support and resistance, where this week found support here. And so I just kind of drew that out, which then aligned with this 4-hour fair value gap as well in that area. So kind of a confluence area right up there. And if I then look at the 1 hour, also a 1 hour fair value gap. So price opened, Asia session, is Asia high, I think was right here. So we traded above the Asia high as well into what we call the buy side liquidity or the fair value gap as well. And then the idea would then be for price to trade down to this line. I looked at it on the 5-minute time frame, and again, price running up into that fair value gap, which is that line, with a small sweep of that high, a breakdown, leaving again a bearish fair value gap. If you've been on the stream a few times, you'll know that I do trade from fair value gaps, and I wait for those to create my entry zones. So created that fair value gap, consolidated in that area, right? But ultimately broke down, and then we see it kind of, I think it almost tapped into that fair value gap again. But my bias is bearish. I found this helpful as well, looking at just seeing the other time frames on your chart as well. Seeing the 1 hour is still bearish. The 4 hour closed as a strong bearish rejection candle, which is good confirmation that price is potentially going lower. And then if we just add the confluence of the VWAP as well to quickly get the new day on there as well. In this case, with this approach, the VWAP is more of a extra confluence later on if you see price breaking below it. Started off slowly, just moving sideways. This is something that I've noticed from the VWAP as well, is often when you have the VWAP just moving like sideways like that, it's not really at an incline or trending, then a impulsive move away from it is often, I know some people refer to it as a manipulation, or it's kind of just a drive that sets in the high or low of the session before continuing in the direction for the day based on the higher time frame. So this was seeing it going sideways and then impulsively pumping away from it, very fast, setting in the high of the session. So this is the high. It was in the middle of just after Frankfurt Open. Sitting in that high, I think we had CPI for the pound as well in this candle, right there somewhere. Yeah, I think it was this one, 8 o'clock my time. Pushed up, sitting in, and this is just maybe off topic, but you see often a news result sit in a high, and then people think, okay, that's the high of the day or high of the session. They short it just to see price push in another high.
Yeah.
Just to like everyone that went short here, quickly take them out. And then you see the so it's very important to stay patient before taking any trades. If you trade high of session, low of session. So if I say trading high of session, low of session, you be someone that looks for the high or the low of the session to be in place, and then take the trade in the opposite direction. So this is very similar to that approach where you wait for the high of session to be in place, and then find your confluences to take a short lower. In my case, I know we're coming from this higher time frame, 1 hour fair value gap. We have the 4 hour fair value gap. So there's a lot of confluences stacked for price to go lower. And then all you need to see for me on the 5-minute or 50-minute is now bearish fair value gaps for me to take a short lower. And then slow. I don't think I would hold a trade to this area, but the most realistic area would for me be kind of previous day low, which is right there, the lows. So that's more or less what I was looking at. Gold, something similar as well. If we go on the daily, yesterday I took a short in here towards the downside because we traded above this swing high, traded above it, rejected it, and then the previous day traded above the prior day's high as well, and then closed bearish inside it. So if we then look at this as a range, we traded above it, closed back below it. And I think there's some data out there, don't quote me on it, but apparently there's data that says that if we have this pattern where we have a strong bullish candle, we sweep the high, we close bearish, there's a, let's say, 60% chance that we will reach the opposite side of that range, which is that low. So I'm not 100% sure. I just heard about it. But anyway, we swept the high, which is the important thing for me. So let's just quickly mark that out. And then this was a fair value gap. So from that high, sweeping that high, the idea is to trade back down into this fair value gap. If we go on the 4 hour, so it was in this move right here. Again, on the 4 hour, we had again price trading above a high, sweeping it, but didn't go lower yet. And then we had again that kind of that trick shot where you have another sweep of that high before we see this strong break lower. And then the trade that I looked at was in this 4 hour candle. So if we then go to the 1 hour, or when was the news? The 5-minute, right? Yeah. You can see the news open up, spike up, so scaring traders, and then we had a breakdown, pull back, and then I created the order block right there, which then in turn was a good opportunity for a short trade just down to that fair play gap. And ultimately I traded right up into that candle low that we mentioned, rejecting, going up higher. So with all of that being said, if we just go back to the daily, if we look at just bias for the day, so now I'm looking at fair value gaps, highs and lows. Okay, so we have a daily fair value gap there, and the previous day changed into it, right? the chances that we're just an inside day trading inside this range is relatively big, because now where do we go to next? So we have the red arrows are usually the target. So we have this low and we have this high. So we're either going to go to the low or we're going to go to the high. We'll have to go to one of them, right? Eventually. But we need to find out which one. Now, this low reacted off a fair value gap. This high didn't react off of anything on the daily, perhaps on the 4 hour or lower time frames, maybe there was something inside there. But just looking at the daily, there's nothing clear for me in this case. So reacting off of this fair value gap, I would think, okay, let's go bullish a little bit towards the upside, but I have no idea till where. So potentially towards the upside, or we could make a pullback and then continue lower, pullback, continue lower. I'm not sure. So I hope you can tell from my reasoning and how I'm talking is that I have no clear, it's very 50-50. It's up, I'm not 100% sure. So then I would rather not look at this, go even down to the time frames, but I wouldn't even go lower. But look at the DAX. This was yesterday. We had this fair value gap and this low. We traded into it. What's the most obvious direction that's going to take? The low.
Yeah.
So because remember, we always trade from fair value gaps to highs and lows, and from highs and lows back to fair value gaps, right? So, and also we had a fair value gap down there as well, kind of like, so it's double confluences there. So in this case, when we traded back into this fair value gap, the bias was super clear that we're going to potentially trade down to the low, which would then be the target. That's then much easier to then go on the lower time frames and find potential tradable opportunities for this leg towards the downside. That is then your area that you're looking for trades in. If you then go to the lower time frames, then you're just looking for your fair value gaps in the direction going lower. So we have one there. We had one. I looked at this one, but it was late at evening and price was close to the close, but price didn't come up to this one. But you can see the concept of we're trading from high time frame areas down into high time frame areas, but in the middle, in that middle space, you want to find those fair value gaps to take shorts from. Again, if we look now at the daily, let's remove everything, just based off of current price action. Where are we going to? I have no idea. We have a fair value gap there. We traded into it, so we have that high. Okay, so we can go there. We traded through the previous day low and into this fair value gap. So where to next? I have no idea. So there's only a high, but it's not. So I like to trade from a fair value gap to an area. So if we see a fair value gap, then an area. If we also just look at the VWAP, then if you want to use the VWAP as well, consolidated again to what I spoke about with GU. See how it's flat. It impulsively moves away, sits in the low of the session, moves back up. So that's a nice indication when you see price just moving flat or the VWAP just moving sideways. If it impulsively moves away, breaks back in, there's a high chance that this is then the low of the session or potentially the low of the day. So now I would be careful to look for shorts going lower because we made the low. We're creating new bullish fair value gaps that we're respecting. Potentially then that would be then where I do think, well, where price could potentially trade back into based on the higher time frame. So I'm using the VWAPs, but I have found that using them with the high time frame direction or narrative just adds a little bit more confluence to the trades and the ideas with the trades. EU, yeah, that's a hard break story. So I'm not going to look at that right now. Yeah, GU is potentially going short. So let's see what happens. That's that's what I have on my radar. I looked at GJ as well, just because we traded above that high.
Mm-hmm.
So then this low is then the next area I do think price can trade to.
Yeah.
I think if we close now bearish, we have a dark bearish closure. I do think we then have a high probability to tomorrow trade down to that
Yeah.
area if we have a strong bearish closure on the day. So I'll wait and see what happens in here.
Nice.
Um,
Okay. Well, thanks,
yeah,
David, for your analysis. Really appreciate that. And I think that's where we're going to finish today. So, guys, thank you so much for joining the live trading room. Hopefully, you took away something. And if you didn't take anything today, maybe you can take something away the next week. So join us again, please. But yeah,
thanks.
we'll see what goes. Also, myself, I love that you on my trade as it goes on the what was I trading? Nasdaq. There we
That's that.
go. Let me show you what's happening now. Okay, I'm in a little profit. Let's celebrate. No, let's not celebrate. Let's let the market does what it does the best. So yeah. So thanks, David. Look, great session. Yay, let's go. Right, guys. So you can follow the updates on the Discord. So please join the Discord. The link is in the description. And also, guys, this month of July, we're having a special deal where you can get $50 off your 50K account, which is only senior accounts. That's only for the 50K account. So I hope you joined Leveraged. And I'm excited to welcome you on the Portfolio Managers team. And that's us, me and David. We are out and done, and we'll see you
Cheers.
the next week. Right, guys? Thank you.
Hey, bye.
Bye bye.